First Republic Bank is seized by regulators and sold to JP Chase. The conspiracy theorists have never been wrong. The smaller banks being consolidated into bigger banks, maximum control and enslavement of the people. What is going on, guys? Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Today we have a lot of stuff to go over, so make sure to stay to the end of the video. And if you find any value out of the video, make sure to hit the like button and hit that subscribe button. Let's get into it. So why the FDIC seizure of the First Republic Bank could cause more bank failures going forward. This tweet by Let Me Be Frank says, okay, logically it makes a little sense for the FDIC to seize a bank for a deposit flight, since it is the deposits that they are insuring. 100 billion in deposits leaving the bank lowers the risk to the insurance fund. Secondly, most of the potential bidders for the bank were just involved in the effort to help them increase their deposits, and those deposits were uninsured, so again didn't represent a risk to the insurance fund. Approximately 70 billion in insured deposits remain secured by 240 billion in assets, almost all if which could be liquidated. JP Morgan was allowed to buy the bank in violation of the law in a rushed manner with no immediate risk to the insurance fund. Plus, on top of it, the insurance fund took an $18 billion hit and allowed a large creditor to pick and choose what assets they would like to keep. Their book of assets had a 0.6 default rate, aka 0.6%. Essentially, the FDIC handed JP Morgan billions of dollars for free. There should be lawsuits and investigation here, but the biggest issue is that if FDIC is going to act arbitrarily and gift billions of dollars in assets to large banks, no bank is safe from arbitrary takeover. JP Morgan wanted those assets and the government let them essentially steal them. Okay guys, so ticker symbol FRC that we called out recently in the Discord, and it basically tanked. That bank went under, was seized by regulators and sold to JP Morgan in violation of the law. This should not have happened and it shouldn't have been allowed to happen, but this goes to show that the smaller banks are going to be consolidated into bigger banks so they can gain maximum control and enslavement of the people. The default rate was extremely low, so therefore JP Morgan basically got handed billions of dollars for free. Looking at this going forward, you can assume that the smaller banks are going to go under and basically consolidate into the bigger banks, which going forward is going to make a safer bet, betting long-term puts on these smaller banks compared to these larger banks, in my opinion, going forward. Not financial advice, I'm not a financial advisor. Now, according to Michael Burry, his chart is pretty accurate. EWBC, WAL, and C lead to uninsured deposits, TFC, KEY, and Bank of America in potential insolvency. This is what he sees coming forward, and so far Michael Burry has been correct based off of this chart. Now here is the elephant in the room. Aside from the major derivative issue going on, the 1-year credit default swap CDSs are at all-time highs. Plus, a fund that has been blocking investor withdrawals since November just limited withdrawals from its $70 billion real estate income trust again in April. This is Blackstone. They limited withdrawals from their $70 billion real estate fund another time in April. Everyone is trying to save their own ass so they do not go under. Now before we get into the AMC stuff, ticker symbol MMTLP. A New York judge has signed an order requiring FINRA to appear in court on May 30th to discuss blue sheet and naked shorting. What do you guys think is going to happen? You think FINRA is just going to get slapped with a little bit of a fine? And what do you think would do justice to this case? Because even if they do get fined, how does retail get their money back? Now, current Q2 numbers, April, are the third highest in history with a very strong chance to eclipse $900 million after today's numbers have been reported. Just one more week to get through until there is an onslaught of big releases to close out Q2. May 5th, Guardians of the Galaxy, May 19th, Fast X, May 26th, The Little Mermaid, June 2nd, Spider-Man Across the Spider-Verse, June 9th, Transformers, June 16th, The Flash, June 30th, Indiana Jones, and July 12th, Mission Impossible. Let Me Be Frank on Twitter says, I am skipping a lot of movies that will do well and bring in decent numbers, but there is a good chance a lot of these movies will bring in 700 to 800 million plus. Q2 earnings are going to be spicy, to say the least. Now don't forget, on the side we also have the popcorn, the Visa card, the credit card, and more fundamental things going on for AMC. Now if you guys haven't seen the two videos I uploaded over the weekend on AMC and the S&P 500, those were important videos, and I'm not going into depth as much as I did over the weekend on those videos as I will right now because those took a while to make. But expect this tiny retracement for AMC before essentially getting another rip going into earnings. The chart is playing out to a T. It's playing out beautifully, and we are almost done with this red cycle. If you want to know my trades, as soon as I take them, I drop them right in Discord. I will be grabbing AMC calls a couple months out. Currently trading at $5.46, down about 1% on the day. Depending on how far this retracement actually goes, I would watch $5, but I honestly don't think we're going to retrace that low. Maybe $5.15 before getting that second initial pop. Pay attention to this earnings cycle down here, as well as what happened back in January of 2021, right before the stock ran and the buy button was taken away. That is the cycle we're playing out. Whether it will play out to that degree or not, I do see a pop going forward. Now, for all the people playing calls on AMC, not financial advice, I'm not a financial advisor again, but now would be the time to do it, as taking a look at at the implied volatility, the historical chart for the implied volatility, it is very, very low, right at this red line. As soon as AMC gets high, this is a dangerous time to buy calls, or a dangerous time to play it in general, because you're risking paying a high premium and essentially making less money, if not losing money. So just keep that in mind. This is a decent time to load up, in my opinion. You guys let me know in the comments down below if you are loading up on shares, if you're loading up on calls, if you're loading up on even puts. Just let me know in the comments down below what you're doing, or if you're just not touching it and you're sitting off to the side to watch. Touching on some AMC or text numbers, but real quick before I do that, guys, make sure to join the Discord. The link is right under the video, as well as in the top of comments. I'll leave it there for you. I'm in there on the daily, and we talk stocks on the daily, as well as post gains, post losses, and more. So make sure to join the Discord, guys. Also, if you want 15 free stocks, use my link, download Moo, make a deposit. It can literally be a penny, so you can start earning up to 15 free stocks, each valued up to $2,000 a stock, so you have a chance at winning 30 grand. Now, to be realistic, you'll probably make a few hundred off of this, depending on how much you deposit. But again, guys, that link will be in the comments or the description down below. AMC is sitting at 26.24% short interest, shares on loan 183 million, utilization is maxed out, and the cost to borrow sitting around 325% for an average, 342 for a max, and 180% for a minimum. As of right now, APE 5.19% short interest, utilization at 53%, and the cost to borrow sitting right around 9%. Now, Stonko Tracker for AMC is reporting 700,000 shares available to borrow at a most recent fee of 211%. In the calls to put ratio, we are winning on the option chain, 42,000 calls compared to 5,000 puts expiring in the money. And if AMC gets a gap up upon earnings, it is going to be a beautiful thing to see. But again, I think the people really playing earnings are the May 19th expiration, where the option chain is loaded up, because if you're smart and you're playing options, you're probably playing them at least a little bit further out, not a week in. So just keep that in mind. If AMC gaps up, you have all of these call contracts going in the money, which could essentially cause a gamma ramp. On top of FOMO and everything else, it will look solid, to say the least. Fingers crossed. I am hoping for the best. As for GameStop, GameStop is down 2.75% currently as I'm making this video, and it is heading for that gap fill at $18.32. In my opinion, if that doesn't play out today, it's going to play out tomorrow or over the next couple of days. As well as looking at GameStop on Stonko Tracker, if you take a look at the short exempt volume, as soon as it starts to increase, they start dropping more shares on this, thus showing even further that they are going to get that gap fill very, very soon on GameStop. They are not going to let this thing rip. We are losing on the option chain, 810 calls compared to 6,000 puts, but more people are betting bullish over the next couple weeks on GameStop than bearish as compared to AMC. Overall, guys, in case you were wondering, France still hasn't stopped protesting. They've blocked ports, stopped ships unloading, took over the Grand Theater, blocked highways, defaced the tax admin building, and stormed BlackRock HQ.